buy a Microsoft or Google is one thing, and that feels a little bit more analyzable, and you can put 5, 10, $20 million position there. But for them to take a view that copper is going higher and Freeport's the best stock to play it, it almost becomes a bridge too far, because first you got to get the view on the commodity right. And then if you even get the commodity view right, as you guys know, mines have failures, countries take away your assets, all sorts of issues can go wrong. And so the ship that was supposed to come with the asset from A to B doesn't get there. So other than very select people who have bought a gold miner basket or some uranium stocks, people have not tried to take that position directly. And by the way, I don't have a big data set because, again, like I said, the people who are even talking about commodities, and that could make you think that we're early in the trade, that people aren't even talking about it. 60-70% of people are long gold, but only 10-15 people are actually long commodities in any way. So if the commodity cycle really takes off, people are definitely not positioned for it. The bet that clients are making when it comes to commodities is where is there a supply shortfall? Where has there been limited capex? Where could there be higher prices because of demand? And so all the things that you mentioned, things like oil and things like uranium and things like copper are what people are investing in, but the typical commodity exposure is sort of 5 to 10% of people's portfolio, max. Right? And people, for the most part, have just done it in a very passive format. They've signed up for a GSCI index or some kind of certificate, something quite simple, not really taking a view on any specific commodity, but just overall think commodities could be going higher. Don't do commodities for the inflation trade. Do the commodity trade if you have a very specific view on very specific commodities and why you think. But this is not a novice game. This is a huge industry. You come into it every 10 years just to be like, okay, I think newspapers are talking about it. I'll make some money. That is a great way to lose money because, again, 3 weeks ago, this was like the obvious trade. And then since then, Freeport's gone down 20, 30% peak to trough. So it's very easy to just get chopped out of that trade. These stocks move because of all sorts of reasons that you don't fully understand and that are not analyzable. And these businesses are cyclical, which means you have to be very clear on when you're buying them and when you're selling them. And the exact moment that it looks like you should be selling them is when you feel very comfortable owning them because all the headlines are telling you how amazing this asset is.